Well, we're back with you to take a look at our ag commodity trade, and in a moment we're going to go back to Chicago. In the meantime, I want to point out some overnight sales that we had in case you missed it earlier this morning. Even though we had all that additional tariff talk with China before the markets opened up, that market bearishness was kind of tempered somewhat by news of overnight export sales that were made. And there was a big batch of soybeans to unknown destinations, almost 500,000 tons. Once again, that's the second time this week. And another batch of soybeans sold to Mexico, 130,000 tons. And we had a batch of corn sold to Egypt, 100,000 tons. And we also had another sale of soybean oil that went to the proverbial unknown destination, and that was 20,000 tons. That was a lot of action that took place overnight. And so the grain markets actually kind of came well off their lows when that news came out before the open. Let's take a look at the markets with Scott Gecas. He is with Longleaf Trading. He's there in Chicago right now. And I'm very curious to know, Scott, what is going on behind you there? What are the traders murmuring about here today as we get toward the weekend?
Yeah, I mean, volatility has exploded with all these tariff talks. So you had the jobs number coming out today that came in a little bit light. You know, the biggest number that came out that sparked my attention with the jobs number was the revision. Went from 239 to all the way down to 175. That's not getting a lot of mention in media across the board, but I think that's one of the biggest significant numbers that no one's really talking about. But as far as the grains go, just across the board, with Trump coming out and saying, with the increasing the trade war talks and the tariffs, it's just a matter of time before China retaliates. Are they going to do it today before the close, or are they just going to wait till the weekend and see what happens? Either way, volatility is elevated. It's exploding right now across the board. You're seeing a lot of people pick up downside puts in terms of panic. I don't necessarily think that it's the right way. As you said earlier, you've seen a big export sales with the soybeans, higher than expected. That's what you started seeing, a little rebound in the soybean market right off the bat. I think this is completely overdone. Like I said earlier this week, even with these tariffs, China still needs soybeans. And with the planting and all the weather going on in South America, there's just more of a reason, more demand for U.S. soybeans.
So lots of volatility, isn't there? I know someone said this morning they thought it was a day trader's paradise this week.
Yeah, that's for sure.
All right, and I've heard the people in the trade, they say it's just kind of like working under the sword of Damocles this week. It's just they don't know exactly how much of a threat it really is. Let's take a look here at the corn and soybean trade right now. On the corn market in Chicago, we are back to almost unchanged. We have May just one tick lower now at 389 1/4. July down 3/4. We are now trading at 397 1/2, while December is now down just a half cent at 412 3/4. That has climbed back significantly, almost 7 cents now off of our earlier low today. Let's go to the soybean trade here right now. Interesting here, where overnight we had that market way over 20 cents lower. Well, heading into the close, we are now 1 3/4 higher on the May. We are 1 3/4 higher in July at 1043 3/4. Well, that's less than a penny from our high of the day now. And we have November at 1032 1/4. That's only 1 3/4 lower on the session. We had a low earlier of 1010, so we've come off of that by 22 cents now. Let's look at the wheat trade. This is where we're talking weather instead of tariff talk. And July Chicago wheat, 3 3/4 higher at 485 per bushel. In Kansas City wheat, we have been trading firmer today. Let's take a look at July. We're 5 higher at 521 1/2. Minneapolis wheat has kind of taken the spurs to it. We have July now 10 3/4 higher at 612 per bushel. And moving on to the cotton market today, we have the July cotton up 26 at 82.41, while December is 7 points higher again at 77.94. We've been on both sides of unchanged there. We'll come back in a moment, and Scott, we'll talk about our livestock trade, maybe some of these outside markets too, when we come back. Let's pick up where we left off talking with Scott Gecas of Longleaf Trading. And you mentioned earlier there were some jobs data numbers that came out this morning. And the market didn't take too kindly to that, from what I understand, on these outside markets here, Scott.
Yeah, there's a lot of moving parts with everything that's going on. A lot of different reasons why the market's down. So the jobs number came in light. All this tariff war talk, the rumors saying that with these tariffs that it's going to have a significant impact on the overall economy. It could even take away all these tax cuts that were implemented in the beginning of the year. That's the biggest fear right now. So we got to wait and see how this is actually really going to play out. But there's either way, it's a lot of volatility. People are panicking, looking for protection to the downside.
Well, let's take a look at the Dow. Right now, it is down 364 at 24,140. So as bad as it is, it has actually come back off of its earlier lows this morning. The dollar value was kind of intriguing today, too. On the dollar index futures, let's look at the June contract, where it's now trading 300 points lower at 89.860. Make a mental note of that. That might be important next week if that's a trend that continues. Let's look at the live cattle market. We checked it a little bit ago, and it had been limit down. We're off of that now. We have June live cattle down 247 at 102.58. August down 218 at 102.70. Meanwhile, on the feeder cattle side of things, with the corn market kind of holding its own here so far this morning, we have the May feeders down 260 at 135.67. Make it down 238 right now. August down $1.30 at 141.38. I still haven't heard much of any cash cattle activity out in the plains. It's getting kind of late in the week here.
Yeah, I mean, the cattle market, again, all these trade war talks, they don't really affect the cattle market, so I'm really shocked that it's having this significant move. But, that 102 level was very significant. As you were saying, it popped above it. We were limit down for a while this morning. But going back, the 96 is going to be about a 3-year low. So we're going to keep an eye on that moving forward within the next couple of weeks. I don't really expect it to test it, but either way, it's right on the cusp, and it's close enough to be able to keep an eye on it.
Scott, how much of this is related to just a general fear of holding a position into a weekend with all the news going on?
Well, that's one of the biggest fears just across the board. It doesn't really matter what product you're looking at today. The fear going into the weekend with the expectations of China retaliating either by the end of the day or they're going to wait until over the weekend. Either way, we know it's coming. We just don't know when. So that's why you're seeing that big, increase in volatility, as well as people just reaching for any kind of downside protection that they can find.
All right, on the lean hog trade today, it's had kind of tough sledding too. Let's take a look here. We're on May, $1.35 lower at 64.50. June down $1.10 now at 72.72. Is it doing any technical damage here? Because we've had some wide outside ranging days here over the course of the week here.
Yeah, with the hog market in particular, this is really shocking to me because you're seeing this big downward pressure because of all these tariff talks. But what no one's paying attention to, or at least from what I'm seeing, is, China's still importing pork. They're up about 42 million. That's the highest since last May. South Korea, they imported enough pork where it's the highest since 2015. So you're still seeing that strong demand for pork. And the sell-off, I think, is a little bit overdone. Either way, that 52.5 level is going to be a key level. We're going to remain bullish if we can see it close above that.
Wow, interesting stuff. Thanks for sharing all the details about the market activity. I appreciate it so much. You have a great weekend. Thanks, Scott.
You too. Take care.
Scott Gecas of Longleaf Trading in Chicago.